Hang Seng, which is doing well. So that index is up almost 1%.
So jobs get created through the investment into the economy.
This is at 24,624 is the first level that the market needs to, the Nifty needs to take out.
Stronger dollar, higher bond yields, which have moved up very sharply recently.
What do you have? 24,370 on the Nifty. Bank Nifty is starting about 1/3% higher.
And 47,000 is the gross NPA, so 1.40 trillion. It is a gold mine for the Punjab National Bank.
Advances growth is, the engine is chugging along quite well.
150 points gone on the Nifty. The sensex is down close to about 450 points.
And because of the RBI guidelines, the penal interest has been booked as the penal charges.
Some of our clinical trials for specific issues have been pushed ahead.
Yes, it's an all-time high of gold and silver prices this Dhanteras to you.
Swiggy India will be hitting the street on the 6th of November.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning, good afternoon, and I should say good night, but I'll say good afternoon. You're with us here in Closing Bell. Markets are up nicely from the day's lowest point. This is Closing Bell. We're coming to you from the CNBC-TV18 Motilal Oswal studios. We're I think not at the day's high, but about 20-30 points off the day's high, which means the Nifty has recovered 200 points from the day's low. The Nifty Bank, that number is close to 900 points. So it's a solid session. Guys, hi, good afternoon.
Hi. Afternoon.
You want to say good morning? You can say good morning.
But it's a solid recovery, right? Like my screen is actually showing a 280-point recovery. The low on the Nifty today was 24,140, and now we're well above 24,400. And just that contribution plate, HDFC Bank, ICICI Bank, and State Bank of India, between the three, they're adding about 130 points to the Nifty.
Absolutely.
Absolutely. And what's happened is the Nifty Bank, with the kind of move that you've seen, has taken out the 20, the 50, as well as the 100 DMA, all of them in a single trading session. From the lows that we saw on Friday, from there you've seen a recovery of close to around 2,000 points on the Nifty Bank. So that's clearly the one that's leading the way. And I think the only sore point in the last 90 minutes or so has been Maruti's numbers, which are disappointing. The stock is down close to around 5.5%. X of that, otherwise there's plenty of good news. The Nifty Bank is firing away. We had that flash on the screen with regard to some kind of stimulus that could come in for the Chinese property market. And the metal index was the other index that was down. That's cut its losses, actually. Stocks like Hindalco, you have Tata Steel as well. They've seen a good recovery from the low point of the day because of that flash that's up for you on the screen. So you had autos and metals that were down. Now, autos is still lower, but you have the metal index. Just pull up the index. That's cut its losses in the last few minutes. So let's see whether or not there is some clarity on Maruti's numbers, which were clearly disappointing. It was a miss on the operational performance.
Absolutely. I think we'll hear from the Maruti management in just a bit from now. The press conference with Bhargav and his team will be addressing the media and perhaps taking questions as well. But I think it's the Nifty Bank which is really charging ahead. And so it's trading above the 20-day moving average, which is 51,507. That is the Bank Nifty. It is now approaching the day's high is almost the 50% retracement of the fall from the all-time high, which is 54,467, to the low that we saw on the 7th of October, which is 50,194. So you take a 50% retracement, that number is 52,330, and the day's high today is 52,280. So just 50 points short of that 50% retracement. But the big one, of course, beyond this, if the market stays above the 20-day, then you're looking at the 61.8% retracement of the fall, which is 52,800. So hopefully, and not long from now, the market will look better and better. I was same time yesterday hoping that maybe by the time you get the institutional flow numbers, things will be looking a little better. No luck, although markets are looking better. So once again, we'll see the numbers which come through later today, and if there is a little bit of lower sell number from FIIs, I think that's the best we can hope for, a flattish kind of number on that front. will be absolutely welcome. I think the broader markets are picking up pace as well. It was 1:1 for most part of the day. Look at the NSE advanced decline. But now it's about 1,500 stocks higher and about 1,200 stocks which are lower. This is the NSE, everything which is trading on the NSE. Rima.
Well, today is also the Nifty financial expiry, so keep your eye on that. It typically results in big movements seen in the financial space. But outside of Maruti, even the other automakers are struggling today. So the top three losers are Maruti, that's right, down 6%. But even Tata Motors, Hero MotoCorp under pressure. But the Bharti press conference is currently underway. It just started at 2:30, so let's cut across.
I will be stepping up to the role of Vice Chair and MD for this year 2025, and eventually as Executive Vice Chair for Bharti Airtel. My job will be focused on 4 areas. 1, to mentor and groom Shashwat so that he's fully ready to lead the India business in 14 months' time. 2nd, I will take on some of the roles that Sunil plays today across the group, specifically driving synergy on digital, procurement, talent, and network strategy. We believe this will add capacity to the group. 3rd, I will spend time scaling some of our incubation and growth areas, digital services, financial services, and data centers. Finally, I'll also provide broader oversight across our overseas operations. In addition to this, I've also agreed to continue as Vice Chair for GSMA as the nominee of Airtel for an additional 2 years, so that latest developments related to technology are assessed and relevant parts brought back to Airtel. I want to clarify that I'm fully committed to the Bharti Group and I have no intention of taking on anything outside the group. Let me now turn to the performance and update on our strategy. A quick background on ESG. In our ongoing commitment towards ESG initiatives, I'll share the latest progress. We solarized over 3,500 sites in the quarter and about 24,800 sites in the last 5 quarters. Our efforts to reduce environmental impact have led to a savings of over 2 million litres of diesel per month over the last 2 years, resulting in approximately 5.8 tons of carbon CO2 emissions eliminated monthly. This has been achieved with the deployment of lithium-ion and while regulating lead-acid batteries and other measures. We recently collaborated with Nokia for energy-efficient solutions and practices to Airtel's mobile network and expect to reduce Airtel's carbon emissions by an estimated 143,000 metric tons of CO2 annually.
Well, that's the big news from Bharti Airtel. While Q2 numbers were good, operationally in line, the reason why the stock is under pressure today, down 2%, is because of the leadership transition. Gopal Vittal, who's been instrumental in making Bharti the leader in the Indian telecom space, has announced that he will step down as the CEO and MD. He will take on a wider responsibility in the group as the vice chairperson, and he will handhold the current COO, Mr. Shashwat, who will take on the role of the CEO. But that transition is going to be very smooth and steady because the new CEO, Shashwat, who's the existing COO, takes on the job, the top position, only in January of 2026. So that's 1 year away. And Gopal Vittal clarifying and reaffirming that he is going to be still very much a part of the group. He will be, providing a broad oversight of the overall business. He will not be leaving the group. So yes, there is going to be a leadership transition, but in every group, in every company, you will always have that leadership transition. And this is going to be, spaced out over the next 1 year. But as I said, immediately there is still some skittishness because you don't know how the new CEO is going to perform, considering the exceptional performance showed by Gopal Vittal in navigating in what's been a very difficult time for the entire telecom, business with, with the competitive pressures, the kind of money that the outlay that they've spent on their spectrum, the returns have been poor. But yet, despite that, Gopal Vittal has, helped Bharti, become the top telecom company. So, the street is naturally a bit worried on how the next step is going to be for Bharti Airtel. But purely in terms of numbers, it's another very, very strong quarter. But let's get back to the markets. How should you position yourself in the last 1 hour of trade? We have with us Mitesh Thakkar now joining in. Mitesh, this is a solid recovery and it's all banks. What would you do?
So in fact, I've been advocating to trade on the long side and abandon short side of the trades of the markets, and I think we've had a bounce back. The bounce back actually started on Monday, and then we had the pullback. Today morning, and then we again picked up. So the important thing is that we've kind of held on to 24 150 170 zone, which is what I was looking at. We got a low of 24 140, and the first target of 24 350 has been met. The next comes in around 24 2400 and 500, which we are now approaching. And beyond that, I'm even looking at a test of 24,750. So I think pretty okay trade with some kind of a long bias, remain slightly positive, and find ideas when the stocks have declined a lot and possibly could give a reversal. In fact, I have Titan on my list, which is corrected from 38.50 to about 32.50, now trying to reverse. So we'll recommend a stop at about 32.30. Look for a first target of 33.70, 33.80 on the upside. And then the other one is a buy on Ultratech Cement with a stop below levels of 11,000 or targets of around 11,250.
Okay, all right. Thanks a lot for that, Mitesh. Well, let's get in Gurmeet Chadda as well, who joins us to help us out with some fundamental analysis. Hi, Gurmeet. Good afternoon. Happy Dhanteras, and thanks a lot for joining in today. Gurmeet, what's your view on Bharti Airtel? I think that's the one that you all have been quite confident on, and I think you all have been building a position as well. What's the view with this bit of a change in the leadership?
I think the results were slightly better than estimates. I think it's, as you rightly said, with Mr. Vittal moving out, and he's been has been a great role in how Bharti has turned around, I would say, in last 3 years as far as stock performance goes. If you see, they are now actually generating 35,000-40,000 crores of cash flows, and the capex as well as the the regulatory payments are about 22-23, which means you have 15,000-20,000 crores of free cash flow. Industry leading ARPU, mobility business continues to do well quarter on quarter, and the churn was also less despite slight tariff hikes. I think I'm interested in this restructuring plan they have from April 2025, where they are basically now splitting the entertainment business into two. One is connected homes, which is your broadband and other stuff, and then you have DTH. I think this will sharpen the focus. My personal view is broadband could be the next growth driver. I think we probably need a recharge or a geo kind of a moment there, because number of households who take broadband are just 2 crores versus a target TAM of about 22-23 crore households, because the tariffs are still high. So I think that could be a big growth lever, and I think entire digital portfolio other than mobility, I think will do well. So Bharti, we are still very constructive and adding on tips, and I think fact that Mr. Bistal stays with Bharti and not really moving to competition, and the new CEO coming in, I think should take care of a smooth transition in my
view. Gurmeet, just coming back to you about Maruti, management is speaking on the numbers. Let's cut across.
Adding on, normally we expect to start production during the financial year, and we are at the stage of finalizing the next site where we are going to expand. I can't yet disclose to you where that site is, but we would be able to do that fairly soon, I hope, once we have all the deal finalized with the concerned state government. I think those are all the comments I want to make at this stage. We'll leave it open for questions now. So thank you very much. And I am now open, and the rest of my team is open for questions, unless anyone, Takuchi-san or anybody, wants to add anything to the remarks which I've made.
Thank you, Bhargav-san. I think it's quite well illustrated our current situation. So I think we can straight go to the Q&A session.
Okay, thank you.
Okay, sir. Thank you so much. Sir, our first question is from Leshamba-san from PTI. I request Leshamba-san to kindly go ahead and ask his question.
Good afternoon, sir. Thank you for this opportunity. Sir, I was looking at the wholesale numbers. Q2 it was slightly down and H1 also slightly down. But you said the retails are doing in the festive season. But overall, if we look at it, do you think that in the second half of the year you can catch up so that you can look at around 3 to 4%?
I would very carefully request you, please don't look at wholesale numbers. The performance of the car industry and the market is determined by the retail numbers, not by the wholesale numbers. We had a situation in the last month, 2 months, where industry as a whole had very large inventories available. Our dealers also had well over 30 days inventories. We have been systematically planning production to reduce the production to suit the market requirements and bring down inventories. We have actually reduced wholesale dispatches so that inventories can come down. The retail sales have been much higher than the wholesale figures, as you'll see. Our retail sales in this festival period, as I said, the festival period, we take it from the end of Navratri till the end of till Diwali. Retail sales will be almost 3 lakhs of cars, far higher than the dispatches. And that is what we are doing to make sure that the inventories are at a reasonable level and there's no mismatch in terms of dealers having to hold and pay for large inventories.
Thank you, sir, for that clarification. And just another question about the Maruti Suzuki R&D contribution on the development of ICE vehicles going forward. So Maruti was supposed to take over most of the development programs for the new ICE vehicles, where the EVs are taken over by Suzuki. So I just wanted to understand on that front, how far has it progressed, and in terms of the new lineups that you have announced previously. So what is the update on that?
No, that's a program which is ongoing. There's nothing which is going to happen in a sudden, but gradually more and more work relating to the development of ICE vehicles is happening in India. We are expanding our R&D organization. We have taken over a new building for that, and we have constantly adding to the number of engineers in R&D. It's an ongoing process, Mr. Nishamba. It's not something which will be something sudden or a one-off or something. It's a continuing process.
Thank you, sir. I'll come back in the queue again. Thank you.
Thank you, sir. Thank you, Leshamba-san. Sir, our next question is from Sharmishta Mukherjee from Economic Times. Sharmishta-san, we request you to kindly switch on your video as well if possible.
Hello.
Yes.
Hi,
Yes, Sharmishta-san.
Hi, Shana.
hi, sir. How are you?
All good. Carry. I can hear you.
Sir, I wanted to check. A lot of FMCG companies have been saying that there is pressure in urban markets. In that context, like what kind of impact are you seeing in demand for automobiles in rural versus urban markets? And given that, you know, a lot of purchases are made during the festive season, is there any uptick in demand for small cars that you're noticing right now?
As I said, the total retail sales have increased by about 14% compared to last year. I think Partho will give you the breakup between the urban and the rural markets. As far as small cars is concerned, I don't think there is any significant difference which will show that something is revived quickly. But again, that is something which Partho will be able to answer better. Go ahead, Partho.
Sir. Hi, good afternoon, sir, Mr. Shan.
Yes, good afternoon, Partho-san.
Yeah. So as I would like to share that rural market is doing pretty well. In H1, the rural market growth has been to the tune of 8%. Okay. But urban actually, as you rightly pointed out, there were reasons for it due to the elections. H1 was really bad, and then that monsoon which came, that also created a problem. So urban is under pressure. It was minus 2%. But rural, there was a very good traction. And as Chairman sir rightly said, that this festival season, we are having a very good traction. We are going to sell most of the vehicles. Our network stock is going to come down. In smaller cars, we are seeing a good traction in the WagonR actually. Okay. So if you go to the market today, you won't find the WagonR so easily available. But yes, there are some models in which you can get the vehicle in the market. So we are seeing a good traction across all the variants.
Okay. Okay. Sir, and we have been seeing in the industry, we have been seeing a high level of discounts, and this had started since festive last year and it's gone on increasing. Now that with the festive season, some amount of inventory will come down in the channel. Can we expect similar levels of discount to continue in future, or do you see that tapering off?
I think
discounts are a function of the market condition and of what the company itself does in terms of scheduling its production to better suit the market requirements. If you create large inventories, you will have to give more discounts to clear them. If you get your inventories down to much more reasonable levels, the pressure to give discounts is not the same. So it'll vary from company to company. It may vary from market to market. But overall, I do not think that in the coming months, in the case of Maruti, our discount levels will be higher than what we've been giving so far, because we have better aligned our production with the market requirements.
Okay. Right, sir. Thank you so much, sir.
Thank you.
Thank you, Sharmishta San. Thank you, sir. Sir, our next question is from Yatin Mota from CNBC. Yatin San, please go ahead.
Good afternoon, Yatin Mota from CNBC Awaz. Sir, I just wanted to know the overall, things on the ground as to has the discounting, increased, because there were earlier news reports that, a lot of auto dealers are having higher inventories. Obviously, you said that post the festive season, the inventory levels are expected to come down. But has the discounted, increase? And in the presentation, I was looking at the promotional cost being higher for the quarter. So are they abnormally higher for the quarter, or is it like a normalized number?
No, I have just explained what has been happening about inventories and retail sales. And certainly the discounts in the last quarter were higher because inventories were higher. But as we have just said, retail sales in this festival period have been very good. They've increased by 14%. Our wholesale has actually not increased. It's gone down by, about 4%. And as a result, the inventory levels have come down sharply. So we don't have that same pressure now of high inventories that we had at the beginning of the quarter. So that itself will govern what happens in terms of discounts and promotions and things.
Right, sir. And has the discounting gone up, if somebody can help from the management?
Which discounting has gone up? From when? I just told you that as inventories come down, discounting also comes down.
Okay. Thank you.
Thank you, sir. Thank you, Yatin San. Sir, our next question is from Pankaj Dowal San from Times of India. Pankaj San, could you also switch on your video, please?
Sorry, I'm joining you from a car, sir. First of all, wishing you all a happy Diwali.
Right, that's the Maruti management. Pretty confident and positive commentary. So 3 lakh units, 14% growth on the festive season, and no real reason why discounting should be higher than before from Maruti's side. In the small car portfolio, it's not really seeing a big recovery, but some models are doing well. Wagoner, one of the gentlemen from Maruti said you can't really find Wagoner that easily in showrooms. I mean, implication being that it's doing very well from the small car portfolio. So stocks recovered a full 3% from the day's lowest point. It was around 6%. And then look at what's happened now. So about 11,165 or so, where we are trading at. Gurmeet is, of course, been waiting by. Gurmeet, thanks for the patience, and good to see you in the festive attire. Thank you very much, and season's greetings. So Maruti, if you want to take a shot at, please go ahead. But my question is, markets lots of stocks have corrected between 20 and 40%. Anything you've picked up, anything which looks interesting, has looked interesting, or still is? Yeah.
So one is, since we are on the auto, I think Tata Motors has corrected, Prashant, more than 30% from 1200 levels to almost 850 now. And I've been speaking to, obviously India JLR is not considered a big part, but I have clients who have agency for a lot of these OEMs. I think it's picking up now. It was a little slow in September, and inventory buildup happened. Plus, we saw margin pressure. The global commentary is that EV seeing moderation. There was news of Volkswagen and some German car makers, shutting down some plants. So I think it's been a bit of overall negative. So we are finding some bargains now in likes of, let's say, KPIT, which is again mostly auto embedded software. OEMs like Tata Motors, some of the ancillaries there. We've been adding banks. If you remember our last discussion, we were very constructive on Federal Bank. I think now you're seeing ROAs inching up gradually. And with the money coming, I think the deposit will also streamline, because that's where, Federal Bank has been lagging some of the private banking peers. So if they can get the names up, get a little more granular on liability side, all those numbers will catch up. The net interest income was very impressive this quarter. So, and I think the stock still is 1.2, 1.3 times book. So we're adding some financials, use some of the weakness to add into some broking names when there was a lot of negative news on the derivative contracts coming down. And we are in general adding, buying on dips. Our strategy has been, bull market corrections are sharp. And I think the market has held well. I mean, you look at the kind of selling which has happened, I think the markets have really held well. Probably this correction has brought some sanity back, which a lot of us wanted as portfolio managers.
Okay, I think just coming back to you, but I think Parikshit is asking sort of the management of Maruti a question. I don't know if we have the feed on and we can sort of cut across to it. Okay, I think we'll go back to that in a bit from now. But why don't we take a quick commercial break? Gurmeet, thanks for that. We'll come back to you with more questions in just a bit from now. 24,450, which means we're up a full 110 points on the index at this stage. Stay with us. Jigar Mistry of Buoyant Capital will also be with us. We're at the day's highest point now as we approach the last 30 minutes of trade. Okay, welcome back. You got markets up 114. So, well, we're going and going how? Nicely, and almost a trending kind of recovery from the day's lowest point. Gurmeet, of course, is with us, but Jigar Mistry is also joining us from Point Capital. Jigar, good afternoon. Good to have you as well. And Gurmeet, thanks for waiting. Jigar, same question to you what I asked Gurmeet. In this, 8-9% pullback from the highs, what has started to look attractive and what have you bought, if you can share with us?
Yes, good afternoon, Prashant. Season's greetings to you and your team. In the pullback, I think, I don't think, Prashant, we have pulled back enough yet. The last time we were discussing, we said that essentially over the past few months, the feeling has been that, this 30-40% annualized returns has become the norm. It's the new reality. If I take a slightly longer term period, say a 5-year or a 10-year rolling return, the average might surprise you. For the Nifty, the earnings growth has been 12% and index growth has been 14%. For the small cap, those respective numbers are 10 and 12%. The past 5 years, index growth has been 22% and it's been even stronger over the past 2 years. 50% of the total mutual fund investors have come only in the past 4 years, so post-COVID, and they've not really seen what a 20% sort of drawdown looks like. So essentially, we need to see whether sort of how the behavioral aspects change if we see a drawdown to that effect, number one. Number two, if your earnings per share and share price growth has always been correlated, and given that they have become dislocated over the past 2 years or so, because earnings have not been over the past 1 year, if I look at large caps, earnings growth has been 22%, index growth has been 31%. And for the small caps, those respective numbers are 17 and 50%. This is just before the current fall. So if they've become dislocated, then it stands to reason that either the earnings will go up quite dramatically, or the share prices need to correct for that relationship to be maintained. Now, given the slew of results that we are seeing in this season so far, it doesn't appear like the earnings is going to go up in a big way, which also sort of then implies that there's some correction that might be imminent, more so from a behavioral standpoint, that that proverbial towel has to be thrown in before we start seeing the next leg of growth, in my opinion.
So you're sitting on cash till then, or you continue to invest, Jigar?
Not beyond the point cash, Prashant, because see, what tends to happen is that the family offices we run money for largely will be managing cash at their end. So we're running a beta of the portfolio that is significantly below 1. Almost 40% of our fund is in BFSI. So those are sort of historically considered a reasonably low beta event. Cash doesn't really, in our opinion, help. Sitting on a large amount of cash, historically, you have had 0.2% of the days driving 60% of the index performance. If you miss the top 10 trading days in 20 years, your returns would have been lower by almost 60%. And missing 25 days, your returns would have been lower by 84%. So cash doesn't really help. Managing the beta of the portfolio certainly does. Post-COVID, we are almost at 1.4 times the beta. A few months back, we are down to 0.6, 0.7.
You said 45% of your portfolio is in BFSI. Any
40.
Exposure? 40%. Okay. Any exposure to companies with MFIs where the stress has gone up considerably? Because I remember in the past you talking about Satin Credit Care. So do you own any such stocks, and what would you do with them now?
Not anymore, Rima, because see, these are sort of within the financials. You're looking at number of cycles playing out, right? So you have the sort of at the first end, your interest rate cycles, then NIM cycles, then asset quality cycles, and then the valuation cycle. So as a sector, these are considered cyclicals. Within that, the MFI is sort of the mother of all cycles, right? Because you might remember how SKS, the original sort of the father of MFI in India, from 2000 to 2010, they grew so well. And then in 2011, in the AP crisis, the amount they had to write down was 2 times the combined profitability of those 10 years. So clearly there are businesses which you buy very cheap and sell cheap. In our opinion, MFI constitutes that. It's been a long time that we have sort of liquidated exposure to all of our MFIs, given that they had run up quite well. So yeah, no longer own any MFI players. What we do own are very large banks, largest sort of PSU bank as well, and the large private sector banks.
Hi, Jigar. Happy Dhanteras and good to see you. And after a while, Jigar, what about these new issues that have come off late? You know, Ola Electric, you have Vare as well. Did you all participate in any of them? Ola Electric, you know, someone who got it on early on, they should have rather booked out. The stock is almost half from the top. Your take?
Hi, Nigel. Happy Dhanteras to you as well. No, we don't sort of own any of them. The sort of, the broad-based thinking going into most initial public offerings is that, the people selling have a disproportionate knowledge of the business compared to the people who come in new to buy those. So unless there is a very, very compelling case, which given the markets were when these companies were getting listed, was not really conducive to sort of people like us who would want to see a few years of listed entities history, also want to see, how the managements react when the first signs of trouble arise. No, we were not owning any of those names which you mentioned. I don't think Vare is listed just yet, but no, we're not even in the anchor positions for those names so far.
All right, Jigar, stay with us. Gurmeet, I want to come across to you and ask you, you track this Maruti very, very closely. I know you have gone to the dealers, you have the auto ancillaries, a good track on all of them as well. What's your view on Maruti's numbers? I'm seeing mixed signals there. They're saying they're not too optimistic about demand upswing, but they're also sounding fairly positive in, in various other segments as well. So what is your view on Maruti? And from the pack, what do you like? I think you mentioned Tata Motors, if I'm not mistaken, but what about Maruti?
So, one positive takeaway is that the rural demand is up. They spoke about 8% up. And I think, Nigel, the crop has been very good this time, thanks to good monsoon. And I think you will see with state elections, Maharashtra, etc., coming out of the way, more cash transfers by central and state governments in a lot of states. You will see a bit pickup in the rural economy, and that's positive for four-wheelers. So I'm not too perturbed. In fact, I was also speaking to some of my clients who have JLR agencies in Delhi NCR. So on the premium side, there hasn't been much letdown. Just that I think there was a period in between that when there was a lull, and Ganesh Utsav and Onams etc. didn't really lead to too much uptake. We'll have to see how the festive season goes. So we are more adding ancillaries right now. So we've added Tata Motors, bit of M&M now post the fall. But we've added more likes of KPIT, Uno Minda. Sona had a very good number. Uno Minda is coming up with a new plant on airbags as well. So you got to see who's doing capex and who's contributing to more content per car when it comes to the auto ancillary space. So we are constructive there. I think the demand over 3-5 years is more structural. There will be down periods, and mind you, the Nifty auto index was 250% up in a year. Most of these stocks were 30-40 times most OEMs. So some moderation, I think, is normal. We do not question when stocks go up 2-3 times. We rarely get very perturbed when they fell off, they take off 10-20%.
Gurmeet, you bought KPIT Tech after it fell post numbers?
Yes, I did. In fact, I've been adding that because, as I said, the software cost of the car, which is currently 26%, eventually will be 60%. So you can have some commentaries on, German car makers, etc. And there could be some near-term slowdown in deal conversions. But, I don't think so. I think electrification and more importantly, CASE, which is connected autonomous shared electric as a platform, which makes the car more smarter, much more connected, capturing a lot of data analytics, it's here to stay. So after your sleep time and your screen time, the third biggest time is the time you spend inside the car.
That's well put, Gurmeet. But by the way, as your Twitter feed, Gurmeet, I was just thinking, if one word has to describe what you post, it has to be equanimity. I mean, don't get too happy and excited when stocks do well, and don't get too perturbed when stocks go down. And I think you've maintained that, and you kind of are of course, imbibing some of that in the investing style, etc. as well. Jigar, talk about one or two ideas. You're a bottom-up guy, so and we've not talked stocks. Must be stuff which is looking attractive, Jigar. With the disclaimer that it's not a, it's not a. We're not asking viewers to buy. They should do their own research, but share some thoughts.
Right, Prashant. So I think a few businesses that did we discuss last time around. See, pharmaceuticals as a space and allied activities look reasonably good. Within that, I think the business we haven't yet spoken about is a business called Blue Jet. Now, as you said, pinch of salt, fistful of salt. People should view and decide. Our fund is exposed to that. But that's sort of one of those businesses where you have them sort of catering. What they manufacture is contrast media, and they are working with 4 of the top 5 industry players in terms of how they deliver this contrast media. There has been a reasonable expansion sort of that has been planned out, and they are going about executing them fairly well. So that's one sort of business that we have liked, and that's something that we find interesting. Besides that, it's not from what it appears, it's not, Prashant, something where there's so much like a stock-driven, stock-specific call rather than what you should own and should not be owning from a sectoral standpoint. So a lot of our time these days has been, going into selecting what sectors we should get positioned into and what are the sectors that you would want to sort of avoid in a big way.
All right. We'll leave it there, and good to get some ideas, Jigar. Thanks for sharing that. With, of course, the disclaimer, as I mentioned. Thank you for joining us, Jigar. Gurmeet, appreciate you being with us here as well. Season's greetings to both of you once again from all of us here at CNBC TV18. 140 points, so we're actually almost at the day's highest level. We'll take a quick commercial break here. We're going to come back with some more ideas with our experts on the other side. Stay tuned.
We're going to win Arizona. We're going to defeat Kamala Harris.
It's the election verdict the world is watching. Will Donald Trump reclaim the White House and become the oldest president to be sworn in?
How will this US election impact global trade and inflation?
Will Kamala Harris make history, becoming the first woman president of the United States of America?
How will the next US president deal with geopolitical volatility? What next for the India-US relationship, the most defining partnership of the 21st century? Watch CNBC TV18 for the best newsmakers and the sharpest analysis.
We bring you all the action live right here on CNBC TV18.
Welcome back. Well, the Adani Group stocks that are part of the Nifty, they have actually spiked up. Adani Enterprises, the numbers are flashing for you on the screen, and prima facie, those numbers look quite good. So Adani Enterprises has moved up. Adani Ports as well is now at the high point of the day. And the big boy, Reliance Industries, remember on the day of its numbers, it went down to around 2,600 rupees, which an adjusted price will be around 1,300 rupees. It took some support to there, and from there it's moving up. So when that big boy wakes up, it's always good news. And the other big boy is HDFC Bank that's been taking support at lower levels. So the Nifty now at the high point of the day, the Nifty Bank up a whopping 1,000 points odd. Mitesh Thakkar is back with us. Mitesh, what's the trade? If someone had a long position, book it, sleep easy, take it easy, come back tomorrow and deal with the markets again? Or do you think partially book it and carry some for the next session?
I think my advice would be to carry the positions on the long side. As I said, I think this pullback will still go slightly higher to about 24,750 is my eventual target, given to 51. So I think we'll suggest holding on. A lot of stocks also reversing from lower levels, and some long positions can be explored there. Eicher Motors is something which has given a very good breakout today. So BTST here with the stop at 48.90, and look for a target of roughly around 49.60 or thereabouts. And the other one is BTST and Vedanta with a stop at about 468.5 for targets of 480.
Thank you very much for that. By the way, Symphony is down close to about 8.5%. The Q2 numbers looked okay. 60% profit jump, more than a 500 basis points margin expansion, but the stock has taken a bit of a tumble. And Tata Tech, which was down nearly 2% as the management sounded cautious about the coming 2 quarters because of US election uncertainty, European OEMs, competition from Chinese EV, Tata Tech has recovered its losses and now is back in the green. The gains are not much, and AMI Organics is a big mover, 12% higher on the back of its numbers. But Federal Bank has also clocked in a good quarter. The gross NPAs have hit a 37-quarter low. Abhishek joins in with the fine print.
Well, it's the first quarter that Mr. Manian has taken over from Mr. Shyam Srinivasan, and looks like Shyam Srinivasan has bowed out on a high. Net interest margin has declined a bit to 3.12 versus 3.16%, and that is on account of the penal interest charges that have impacted by about 5 to 7 basis points on net interest margin. However, asset quality, that's pristine, one of the best that you are seeing in last 9 to 10 years for Federal Bank. Gross NPA ratio has come down to 2.09%. versus 2.11% in the previous quarter. In terms of absolute value, slippages have increased only by rupees 10 crore. So the annualized slippage ratio at about 0.75% is one of the lowest in the industry banking sector, as well as the fact that it's one of the lowest that you are seeing in last 15 quarters for Federal Bank. So operating profit growth is at 18.2% YOY, which is one of the best that you are seeing in last 5 quarters. And sequential, the growth is more than 4% for them. In terms of our poll, the PNL, the NI is largely in line with our poll. However, the PAT is higher by 6 to 7% than our poll. Brokerages remain bullish on the stock. Citi has a buy rating and a target price of 231 per share. They also have a 90 days positive catalyst watch, which is open for Federal Bank as well. Nomura also has a buy rating, target price of 240 per share. And then we have UBS, who has a buy recommendation and a target price of 250 per share on Federal Bank. Back to you.
All right, Abhishek, thank you very much for that. So those are financials in focus. Hoodco numbers, by the way, at the bottom of the screen. Profits are up 50%, revenues are up 35% coming through. Well, let's cut across to our special show from the National Stock Exchange, where the young guns of Dalal Street are talking about markets with our colleagues Mangalam and Surabhi. Listen in.
You identified trend, and when did you decide to, enter? What exactly was the story like?
So Mangalam, we're just looking at every company possible, we don't miss out all 5,000 companies. We don't miss out even one quarterly result. That's the first basic thing that we do. We keep looking and we divide industries, that who's in every industry, who's that player, who's the rock star of that industry. We had pain, and we have a 25 stock portfolio. So there is always 5-7 stocks in my portfolio who are struggling. Like today, I'm struggling in a airline company. I'm cutting some weight, down 20%, but it's okay. I'm buying something else, 20% down. Everything else, everything is down 20% now. So if you're cutting something, you're also buying something down. You want at any point of time your portfolio to be the best performing companies. And you need visibility. See, I don't have a 10-year visibility. I have maximum 4 to 6 quarters of visibility. And I am only thinking, for me, terminal value is 6-8 quarters. Like, of course, I think about, of course, we buy market leaders and beyond, but we think that beyond that rate of
exact opposite to the person on your left.
No, of course.
Right.
Because we think long term, short term, medium term, everything.
All
because if
so he's a sprinter, jumper, and a marathoner. please tell us.
See, that's why we buy a D-Mart. You can have D-Mart for 20 years also. You can have D-Mart for 6 quarters also. But so we keep looking at options and available options because we have to invest. And Trent.
Yeah.
We initially bought Trent pre-COVID, to be honest, at 600 rupees.
What did you see there?
That time we were seeing West Side had the highest like-to-like growth.
Okay.
We didn't know Zudio will come.
Yeah.
And then COVID happened. We sold Trent. We lost 20% and we bought some pharma stock.
Okay.
We made money in the pharma stock. I'm telling you the real story. Because we made money we were buying Dr. Lal and Metropolis because we could see tailwinds in Metropolis and Dr. Lal that time in COVID. And we couldn't see when the malls opened.
Yeah.
From 600, we bought Trent again at 1200 after 2-3 years. So we are unemotional towards our investments. We are just thinking that what next is going to have those tailwinds of high growth. We were selling D-Mart, emotional less. It was my first holding. It was the only stock we've held for 5 years in the fund.
I would like to be on the road with him once, and when there are like those toll booths, there are 5 or 6 of them, I will ensure that his car is the one which goes through that toll booth first, or those airport queues as well, because he's just the one who's...
No, I think that's another very, very important lesson, being emotionless. Not letting your ego get in the way or your attachment with one stock. Oh, I saw this story and I will see it through the end. So I think having a little bit of disengagement at a level, I think is also important. So we've taken that point on board. Now I want to come to Ravi. And Ravi, you made a really important point, right? So today, like if you ask me, it's a no-brainer. Of course, you have to be in stocks which are in renewables. Obviously, you have to play energy transition. Of course, you want to be in the semiconductor space. But that doesn't make me Ravi Dharamshi, right? The magic is in picking the companies within that space. So then explain to us, how do you do it? I mean, whether it was HAL in defense, whether you picked Hitachi, I think, to play this whole energy space. What goes into the tier 2, tier 3 filtering?
No, so let me just spend a couple of minutes explaining why energy transition. It's not like energy transition came about today. Humans have been going from one source of energy to another source of energy over a period of time. But this is the first time that we are moving away from all our sources of energy have been natural till now. We dig ground or we burn gas or whatever it is. But this is the first time that we are moving towards a manufactured source. Essentially, energy will be, of course, we are catching the energy from either from wind or from solar. But the industry that will benefit is the manufacturing industry over there. In 2019, we had COP27, where till then there was no consensus in the world regarding whether there is global warming, what should we do about it. But that was the point at which 90% of the world agreed that we need to restrict the increase in temperatures to less than 1.5 degree by 2050. Now, if that is going to be the case, and finally we had regulators, governments, non-government, commercial enterprises, individuals, everyone aligned to the fact that we need to bring the greenhouse gas emissions down. Now, this is what gave the impetus, and this was the trigger that, okay, now a lot of money is going to flow in this direction. Which are the businesses that can benefit out of it? And if I were to lay out the energy transition, it's energy generation, transmission, and consumption. And on top of that, of course, there are finances and new technology that will develop. But in energy, there are sources like solar, wind, nuclear, biofuel. At the end, in the consumption, there is electrification of everything. We talk about EVs as a trend, but EVs, there is two-wheelers, CVs, three-wheelers, buses. There are many segments. In the power transmission, of course, it's like if you're going to start selling cars, you need to first have the roads in place. Unless we have our power transmission in place, we are not going to be able to transition away from fossil fuels, which is a much more stable source of energy, to renewables, which is far more variable and infrequent.
Sure.
So we need to have power transmission, which is a grid which is far more flexible, efficient, much larger and effective. So this is how we looked at the entire space. And when you saw that, what we realized is, as I mentioned, that a trend can play out over a 20-30 year period, but which is the immediate sector that will benefit.
Correct.
And that's where the power transmission fits in. That we need to build this power grids
in the next 7, 8, 10 years.
Welcome back. Now it's more than 100 points up on the Nifty. Will we make a dash towards 24,500? Perhaps if we had a little more time. We have 3.5 minutes to go, but Trent is now picking up. That's up nearly 2%. Reliance Industries is also back in the green, and that's up 0.5%. And your top Nifty gainer is State Bank of India. That's higher by 5%. Jay Bala is now with us of cashthechaos.com. Jay, 2 good days on the trot.
Yeah, hi Rima. This changes nothing for me. Just the character of the next decline is that one in question. Whether the market stops under 24,700 or comes to about 25,300, it won't change. That's the possibility for the market. But further declines are due for the market, and I remain unchanged. That what I said on the 1st of October, the markets are heading towards 21,280, and it's just how much the current bounce is going to happen. What's happened today? There's a structural breakdown for the bull market leaders, Nifty FMCG index and Nifty Auto index. So the momentum is saying that further lows are due for both these indices, and some of the mainline stocks like ITC, HUL, Britannia, Nestle, they're all pointing to a deep correction that's underway.
So the Nifty level is 21,000.
Yeah, 21,000. The June 4th low, 21,280.
21,280. What about the Nifty Bank? That could spoil the plan, Jay. It's suddenly coming back to life. It's heading into the resistance zone. I mean, in 2 sessions, it's up 1,600 points. Where is that one headed?
Yeah, the Nifty Bank is doing exactly what it should do. It's the complacency that's in the market is engendered so much that Nifty Bank is doing or furthering that. It could bounce to somewhere close to 24,475, maybe 52,475 to 52,950, and probably bounce back to that and then begin the next leg of the decline. So it's doing what is expected of the market. See, for far too many times, the markets have had very short dips and it's got a very quick bounce back. And this is slightly different because of the structural breakdown.
Any stocks you want to give us, Jay, for today? A couple of stocks, I believe. Silver is going up. There's only one way to play it, which is Hindustan Zinc. And since it's Diwali, a lot of sweets being consumed, you're going with the sugar stock. Tell us about the levels on both of them.
Yeah, that's right. Hindustan Zinc is probably a silver lining in this dark cloud. It's got a very medium-term uptrend possibly going on, but you need to keep it reasonably small because we are in an overall corrective environment. This could outperform, but you need to be very careful. The levels are about 880 in the medium term, and the short term is about, I expect to in the short term to reach about 678 and then pull back and then proceed to the medium term. The stop loss is about 490. And Balram Puccini is again a play on sugar futures. Sugar futures decline of October is looking corrective. The similar structure is presented in Balram Puccini. So I'm anticipating sugar level futures of US to touch about 24 cents. I anticipate Balram Puccini to be the beneficiary of that. I'm anticipating it to touch somewhere about 700. Keep a stop about 590.
All right, Jay, stay with us. We're going to come back to you in just a bit. So 0.5% higher on the Nifty, about 100 plus points. 300 off the lows for the Nifty. The Nifty Bank ending 2% in the green. So that's a strong showing for the Nifty Bank. And guess what? It's the PSU Bank Index, which really shone through. The PSU Bank Index is up 3.5% today. It was up 4% yesterday. So that's in 2 sessions, 7.5% coming through on the PSU Bank Index. Earnings, I think, without a doubt, have been pretty strong, unlike private financials where they've been, much more mixed. The CPSE index was up about 1.6%. Private banks also not bad. I mean, 1.5% higher. Real estate 1.3, 1.4. Names like Loda, etc., came back after seeing a bit of a drubbing in the recent past. On the downside, autos, of course, clear cut. The top 3 Nifty losers are Hero, Tata Motors, and Maruti. So that says it all. Pharma and healthcare were the other 2 sectors which were under pressure, 1.25% and just under 1% respectively.
Well, SBI is your top gainer, 5% higher, and ICICI Bank has put on more than 6% in a span of 2 trading sessions. Life insurance companies like HDFC Life, SBI Life have had a good day today, 3.5% higher. BEL clocking in some good gains. Heavyweights like L&T also contributing on the way up. On the way down, outside of auto, some pharma names were on the back foot. So Dr. Reddy, Sun Pharma and Cipla were down 1.5% to 2%. But it's a pretty good day for the mid-cap index too. The index ending up 1%.
Well, that's right. Both of you all are going to take markets forward ahead. I'm going to be heading to buy my 2 grams of gold since it's a Dante Rust. Well,
Nigel has become, in the morning, you said 1.
Yeah, 1, but 2 kids. 2 kids now. One will have to give the daughter-in-law, one the daughter later on in life. So now I'll have to increase it to 2.
I think by evening it'll get to 3.
No. BB,
one for the wife.
No, BB doesn't get.
All right, you enjoy, Nigel, and we'll take you through markets forward. So we'll take that break. Stay with us. More coming up on the other side.